Ladies and gentlemen, good day and welcome to the Astec LifeSciences Q3 FY21 earnings conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankur Periwal from Axis Capital Limited. Thank you, and over to you, sir.
Thank you, Aisha. Good afternoon, everyone, and thank you for joining us on the earnings call of Astec LifeSciences for Q3 and 9-month financial year 21. We have with us today Mr. Nadir Godrej, Chairman, Godrej Agrovet and Astec LifeSciences. From Godrej Agrovet, we have with us Mr. Balram S. Yadav, Managing Director of the company. From Astec LifeSciences, we have with us Mr. Ashok Hiramat, Managing Director, and Mr. Arijit Mukherjee, Chief Operating Officer of the company. We would like to begin the call with a brief opening remarks from the management. Following up, we'll open the forum for an interactive Q&A session. Before we start, we would like to point out that some statements made in today's call may be forward-looking in nature, and actual results may differ from those expressed or implied. Would like to hand it over to Mr. Nadir Godrej now for his initial remarks. Over to you, sir.
Good afternoon, everyone. I welcome you all to the first earnings call of Astec LifeSciences. I hope and wish you are doing well and are staying safe. In the third quarter, India has seen a sharp decline in COVID cases, which has led to the gradual opening of the economy and thereby an uptick in the business activity. There has been a V-shaped recovery, with most sectors witnessing business activity at pre-COVID levels. However, unlike other sectors, agrochemicals was not impacted by the lockdown, and the companies in the sector have seen reasonable growth both in the domestic and the international markets. Astec has also capitalized on this opportunity, and our performance in terms of profitability has been excellent in the first 9 months of the year. Now, I will quickly take you through the financial performance and key developments of the company during the third quarter and the 9 months ended December 2020. In quarter 3, fiscal year 21, Astec reported consolidated total income of 117 crore compared to 129 crore reported in the same period last year. EBITDA and PBT during the quarter were 19 crore and 11 crore respectively, as compared to 25 crore and 16 crore in the same period last year. For the 9 months fiscal year 21, total income was 387 crore compared to 349 crore reported in 9 months fiscal year 20. EBITDA and PBT were 80 crore and 57 crore respectively, compared to 49 crore and 22 crore in the same period of the previous year. In the current quarter, the total income was impacted by deferment of a few orders and decline in prices of one of the key products. However, on a 9-month basis, due to the seasonally
Sorry to interrupt. Mr. Godrej, we couldn't hear you. The last statement you made, we couldn't hear you.
Yeah. In the current quarter, total income was impacted by deferment of a few orders and decline in prices of one of the key products. However, on a 9-month basis, the total income grew at a healthy rate of 11%. We would like to highlight that due to the seasonality involved in our business, full year financials are a better representative of our performance. Geographically, revenue growth in the 9 months is driven by the domestic business. However, exports have also been higher than previous year. Also, contract manufacturing business has grown faster than the enterprise sales. While the current quarter's EBITDA is impacted by lower revenues, on a 9-month basis, EBITDA is up by 62%. The revenue growth, coupled with lower costs, have contributed to our robust performance. The full year also, we believe that our overall revenue and profit growth will be in line with our expectations. In terms of our ongoing projects, construction of our new herbicide plant is expected to be completed in the fourth quarter. Further, the construction of our new state-of-the-art research and development facility is progressing as per the plan. We believe that this will lead to a quantum jump in our R&D capabilities. Opportunities for Indian agrochemical players remains high, both in the domestic and the international markets. Global agrochemical companies have increased their focus on Indian companies for manufacturing of active ingredients and intermediate agrochemical products, thereby increasing inquiries in the contract manufacturing business. Also, as a large number of molecules in the next 3 to 5 years, it further the prospects of Indian players. At Astec, we believe, given our future plans, we are well placed to capitalize on the growing opportunity. That concludes our business and financial performance update for the quarter and the first 9 months of the year. With this, I close my presentation. We are so happy to take your questions. Thank you.
So shall we start with the question and answer session?
Yes, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shravan Vora, an individual investor. Please go ahead.
For the opportunity, I just wanted some clarification on 2 things. First was on the stake sale by Mr. Herimet, because he's been a promoter investor. So any specific reasons for that?
The stake sale was purely on account of personal reasons. I can't elaborate too much on what those personal reasons were. It has no bearing on my confidence in the future prospects of the company. I believe in the future of the company being extremely strong. I continue to maintain that view, and I continue to have some stake, a diminished stake in the company, but nevertheless, I sold some stock for my personal reasons.
Perfect. Thank you. And the second question is, as Mr. Godrej mentioned, that there's a lot expected from this industry, and the government has also been talking about it. So any long-term guidance in terms of revenue and profitability that the management can share?
Well, we've always said all along that we target for a CAGR of 20% in terms of bottom line. Our top line growth varies according to selling prices and market conditions, but the bottom line growth of 20% is what we target for, because we want to maintain our margins in spite of variations in selling prices. So that's the guidance I can give you.
Right. Right. And just one last thing on the herbicide plant. I think Sir mentioned that the plant will be commissioned in Q4, and we had guided in the previous call that a targeted revenue would be between the range of 150 to 200 crores. So any timeline on till when we can achieve that kind of a revenue?
Yeah, it will take a couple of years to reach full capacity utilization. Now reaching close to completion of the of the construction of the plant, and we want to inaugurate the plant in the third week of February. So the full impact of the revenues will come in within 2 years of the commissioning.
Perfect. Perfect. Thanks a lot. All the best.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Ashish Thakkar from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. So if you could name which product suffered the most, impact on the realization, what was the quantum of the impact this quarter?
There was a product called Tebuconazole. The price came down by 30%. Of course, the main issue was that in a falling market, what happens is that you have raw materials which you've already procured and you've stocked, and therefore you have to get through those high-cost raw materials, and therefore your margins get affected temporarily. Subsequently, the costs of the raw materials have also gone down. Therefore, the margins will recover in Q4. So that's the product where the selling price went down significantly.
Okay. So this will continue to have an impact on fourth quarter as well, right?
No, the fourth quarter, in terms of the sales value, is lower than what it was in the previous quarters, but the margins will get restored to the previous levels. This margin hit which we took in Q3 will improve in Q4 because we've run through all the high-cost raw materials, and now we've again realigned ourselves with low-cost raw materials, and therefore our margins will be restored in Q4.
Okay. So as the guidance was given in earlier quarters that 19-20% EBITDA margins on a full basis are sustainable. So that would stay, right?
That would stay. Definitely.
Okay. And so in terms of your herbicide capacity which is coming up, you said Feb 3rd is the commercialization time. So obviously fourth quarter we'll also see some booking of revenues from this facility, right?
May not, because when you start a plant, it takes some time for the finished product to come out, right? So I don't think we will see any revenue impact from the herbicide plant in the fourth quarter.
Okay. So you're saying revenues typically get booked with a lag of a quarter, right?
Well, I mean, it takes about 1 to 2 months for the finished product to come out. Being a new plant, the products have to be approved by the customers, and then after the quality approval is there, then you ship the material. So it takes a couple of months for the cycle to start.
Okay. And just one last question before I get back into the queue. On this herbicide plant itself, what is the kind of OPEX that we are expecting on this 80 crore CAPEX?
OPEX, well, I mean, Saurav or Arijit, can you help out on this one? What would be the OPEX on that?
So the details, we don't have it right now. So we will take some time to calculate the details, and then we can share it individually.
Okay.
All I can say is that on an incremental basis, again, the plant will give us an EBITDA margin of 20+% after, so the costs will be in line with such a EBITDA level.
Okay. And so broadly over the next 2 to 3 years, we were having aspirations of touching the 25% EBITDA margin mark. So directionally, that trend continues, right?
That trend is continuing, yes. We're getting a lot of very high quality inquiries where the margins are better than our previous products, and the better our product mix becomes, the higher the margin will be on a blended basis in the future.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. We would also request the participants to please limit your questions to 2 per participant. The next question is from the line of Sagar Jethwani from Phillip Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, can you please give us geography-wise outlook or trend on how US, Europe, India, and rest of the world have performed? This is my first question. Thank you.
We're seeing a lot of strong traction in the US market. Of course, everything varies from product to product, to be honest. Some products are selling very well in Europe. Some products are selling very well in North America. Some products are selling well in Latin America. We're even seeing good demand in Australia. Australia is a very cyclical market because they have years of drought and some good seasons. But these last 2 seasons have been good, and we're seeing good demand from there. The domestic market has also been rather strong. I'm happy to tell you that one of the products which had seen a low demand last year is selling so well that we're sold out till Q2 of the next financial year. So demand is not a problem for us. Geographically, we're seeing good demand from all over the world.
Okay. Sir, my second question is how many molecules we plan to launch in next 2 to 3 years?
Now, in Q4, we plan to launch 1 molecule. In the next financial year, about 2 to 3 molecules. And every year, we want to launch at least 2 molecules.
Okay. And sir, one last question, knowledge-based basically. If you can, help us understand if there is any alternative to triazole-based chemistry. Not sure if it's SDHI. Any comments on that would be helpful. Thanks.
Now, SDHIs have their role in the market. As you know, if you look at the history of fungicides, you had the thiocarbamates, and then you had the phenylamides, and then you had the triazoles. The triazoles were introduced in the 80s, and in the 90s, the strobilurins came along. And then when the strobilurins came along, people said the triazoles would be replaced. But what happened was that the strobilurins the fungus developed resistance to strobilurins. So they found that they can only be used effectively when they're combined with a triazole. So the usage of triazoles, it's like a bread and butter of fungicidal treatment. So when SDHIs come, they also work well along with triazole fungicides. So in spite of the fact that these new generation mode of action fungicides are coming in, triazole fungicides are still growing and always need to be combined with the new generation ones so as to avoid fungal resistance. So we don't see that the market will be affected by the introduction of the new generation fungicides.
Very helpful, sir. Yeah.
One more just addition to it. Triazoles has much wider application, right? The mode of application or the crop coverage of triazoles is much wider than strobilurin or SDHI, number 1. Number 2, the amount of combinations they can make with other molecules, that is also greater. And there is no any reported case of resistance. So all of this makes to be a good molecule to remain in the market.
Very helpful, sir. Thank you and all the best.
So I'll just finish that by saying that of all the classes of fungicides, triazole fungicide is the largest market.
Thank you. The next question is from the line of Swarnabh Mukherjee from Edelweiss. Please go ahead.
Thank you, sir, for the opportunity. Good afternoon. Sir, 2-3 questions from my side. First of all, in the opening remarks, it was mentioned that I think few orders got deferred in the current quarter. So just wanted to understand what is the quantum of that, and would that be visible in the upcoming quarters numbers? That is my first question. Thank you.
Sorry, can you repeat that, please? I didn't get it.
So the order deferments that have happened, so what is the quantum of that, and would that be visible in Q4? The orders will.
Well, that's an equivalent of a profit of about 2 crores. It's not very significant. It happens every quarter. So it is there, but it's something that we'll make up in the next quarter.
Okay, that's very helpful, sir. The second question is on the herbicide plant. So would this be primarily used for catalog products, or would there be also an element of contract manufacturing as part of it?
So at the moment, the herbicide plant is being used for contract manufacturing. All the products that we have in mind are contract manufacturing products.
Okay.
And we have a good pipeline of products. We introduced one extremely promising herbicide intermediate in the last quarter, which we, because it was needed on an urgent basis, we made it in the existing plant. It has a potential to be a very large volume product. It is an intermediate for a patented herbicide. But as the volumes grow, we will be moving it into the new plant, and then free up the old plant to make the existing products.
Okay. So, sir, if I understand correctly, then in your contract manufacturing business, you are not dependent only on the triazole chemistry, right? So you are manufacturing products across different categories. Would that be a correct understanding?
Correct. Absolutely right.
Sir, what proportion of this would come from the patented side, and so how is your partnership with your customers? So, for example, are you involved in the early R&D stage as well, or you come at a later stage and your contribution is more on the process side? If you could elaborate a little bit on that.
Yeah, I mean, at the moment, we are not really doing early stage research. Our new R&D center, which is going to be commissioned next year, it will be at a scale where we can start doing the contract research part as well. Currently, we are so busy with doing process development and bringing products online that we don't have the bandwidth to do basic research. We come in at a stage where there is either a product without a technology, we just have to do the process development, or there is a tech pack available, and then we take it and take it forward. So those are the two models. But at the stage of the development of the molecule, we're not involved for the moment. This is a plan for the future.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Amar Maurya from AlfAccurate Advisors. Please go ahead.
Yeah, so thanks a lot for the opportunity. So my first question is on the margin, when you had said that, because of the RM, basically your profitability gone down. But if I see the gross margin, our gross margin largely remained intact. So just if you can add some color on.
Well, actually, yeah, we did this analysis. The gross margin actually went down by about 0.5%.
Correct.
So if you look at it, it went down by about 4.5 crores in terms of absolute value.
Correct.
Which flowed down to PBT level. And then in terms of at PAT level, it went down by about 5 crores because there was a little bit of extra provision of taxation we had to do for previous years. So now 5 crores of 12 crores is a higher percentage than 5 crores of 120 crores, right?
Correct.
So therefore, as a percentage, it seems like a higher number, but in absolute terms, that's a number which is the difference.
Okay. And secondly, sir, if I see your overall other expenditure, that has broadly remained flat on a sequential basis. So wanted to understand what would be the increase in expenditure once the herbicide plant comes, and secondly, how many new employees will be adding in the new herbicide plant?
I'll answer the first part of the question. The increase in cost, again, will be such as to give us an EBITDA margin of 20%. So this is the nature of the beast. You put up a new capex, you put up a new plant, you hire more people. There's OPEXs over there, and then you have revenues and you have contributions, and then you've got an EBITDA. So that's going to be in line. But in terms of the number of people that we're hiring, Arijit, I'll ask you to come in on that. Yeah, please tell.
So operating cost, the first part, operating cost will be similar to the cost which we are operating currently.
Okay.
Number of people roughly will be adding up around 100 plus 110 people in the initial phase, and as and when the capacity utilization increases, then we will see whether there is an increase, there is a requirement for increase of manpower.
Okay. So peak employee would be how much in this to generate 200 crores kind of a revenue?
I think 110 plus minus another 10% will be 10 to 15% will be increase.
Okay.
This will all depend later on. First, initially, it will start with 110. So all the department will be staffed sufficiently to carry on the operations.
Got that. Thank you, sir.
We generally look at about a turnover per employee return of about 1.5 crores.
Yes.
Thank you.
Yeah.
We would request the participants to please limit your questions to 2 per participant. The next question is from the line of Saurabh Kapadia from Asian Market Securities. Please go ahead.
Thank you for the opportunity. So if I look at overall triazole portfolio, then only I can see tebuconazole is one molecule where the price has declined significantly compared to the other molecules. Any specific reason or any new supply that has come in last couple of quarters?
Yeah, there was so a lot of plants in China had gone offline because of COVID. They came back online after COVID, and that's why the prices went down. But this is like a steady state situation that we see going forward.
So in going ahead, this pricing will be maintained, or do you see scope for improvement at least on the tebuconazole side?
Well, I mean, see, China at the moment again is seeing a resurgence of COVID. So we're seeing a lot of provinces that are having restrictions. So we've got to wait and watch and see what happens over there. And if some provinces where these tebuconazole plants are located get affected, then again the prices may go up. But we'll have to wait and watch, to be honest.
Okay. And how do you see the ramping up of the new plant going ahead, the new herbicide plant? So how do we see revenue for next year from this plant and maybe in the second year of operation?
As I said, it will be a phased thing. It'll reach that full level of this asset turnover ratio of about 1.7 or so within 2 years. So you can just look at that stepwise.
Okay, so maybe first year at 1x kind of turnover, and then in the second year maybe 1.7 to 2x?
That sort of thing. Yeah.
Okay. And just last thing on your long-term growth visibility. So definitely in this over next 2 years, this herbicide plant will get fully utilized. And you're also putting up the new R&D lab. So definitely there will be more molecules that will come on stream or get commercialized. So is it fair to assume that every 1.5 year, Astec will have to put a new multi-purpose plant so as to cater the new molecules?
Seems about right, yeah. That's what one has to do. There's enough demand to keep putting up more and more plants. Luckily, we have a lot of land in Mahad still available to put up another few plants. But we're also scouting for new land in Gujarat, and we will be buying more land over there, and then we might put up another greenfield project over there in the future.
Thank you. Saurabh, we would request you to please come back in the question queue for any follow-up questions. The next question is from the line of Abhishek Maheshwari from Skyridge Wealth Management. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. So my question is regarding your imports. So what percentage of your total input cost are you currently importing as of date?
Yeah, that number is about 70%. 75% is what we import.
Okay.
I've got it here. Just one sec. Just read it. Yeah, we import 70% of our total purchases.
Okay.
Of that, 75% comes from China.
75% come from China. And sir, have you set any internal targets? Because you're working on backward integration. So are there any internal targets? By maybe 2022 you want to bring it down to this level, or?
Yeah. Now the good news is that we've commissioned one product. 50% of our purchases from China are one particular product, and we have commissioned that plant. We are in a position to make as much as we need. So depending on the price from China, we either make or buy from there. So that immediately brings our total purchases from China down from 50% of our total purchases to 25% if we choose to do that.
Okay.
So we don't have a specific number, but as far as possible, we want to minimize the dependence on China. And that is an ongoing activity.
Okay, sir. I think that would suffice. Thank you, sir. And sir, my second question is regarding, the future outlook. So currently you're only focusing on agrochemical divisions, right? So do you see an opportunity for, getting into key starting materials for API pharmaceuticals also, or only focus? Okay, so you will be focusing on pharmaceuticals also.
Yeah. For the moment, we are doing non-GMP pharma intermediates we can do.
Okay.
As the opportunities arise. And maybe in the future, we might put up a GMP facility somewhere. But at the moment, non-GMP pharma intermediates, we have some products developed. It's just that we've been too busy with our other projects to implement them. But as and when we have the bandwidth to do it, we will implement those projects.
Okay, sir. Thank you very much. All the best.
Thank you. The next question is from the line of Ankur Arora from HSBC Global Asset Management. Please go ahead. Ankur, we would request you to please unmute yourself if muted from the handset. As there is no response from the current participant, I have muted the line. The next question is from the line of Nikhil Rungta from Nippon India Asset Management. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Two questions from my side on the new herbicide plant. First is you mentioned that over say medium term, the margin would move to approximately 25% in this plant. What would be the type of gross margin we would be making in the products for this plant?
The gross margin then in that case would be closer to 50%.
Okay. And next is what the capacity level are we booked for the new plant? Is it 100% right now?
Not right now, but over the next couple of years, they will be. As I said, we've commissioned this new project. The contract for that will be finalized, and projections will be finalized, and then we will have the full booking of that capacity.
So, in this new herbicide plant, which is starting in this quarter, my question was what type of capacity orders we would have already received in the team?
Well, the orders are, say, occupying 30% of the plant. But we're under negotiation for products which will occupy the plant to maybe 80%. And then we have products in the pipeline which we are also planning to bring online in the next couple of years, which will take it up to 100%.
Okay.
So you see the trial quantities that we've given, so it's not just something that we are hoping for. We've already supplied the trial quantities successfully. Okay. The product is since it's under patent and is being introduced right now, obviously the volumes ramp up over a period of time. So
right.
It will grow in volume, and therefore the occupancy of the plant will increase.
Okay. So the follow-up question on this was, if any incremental new order or new customer is coming in, where do we are booking those orders to? Basically, the new plant is already occupied for these trials and all. So incrementally, if new order is coming, what are our plans? Are we in plans to set up any new in the near term itself?
No, in the new plant, we have the ability to put up many more reactors. That is one option. The other option is that there are various ways of debottlenecking your plant so that you can get more throughput from the existing plant, and therefore you create spare capacity like that. One of the things that we're going to be doing in our new R&D facility is process intensification, which is a way that you can get a hell of a lot more throughput from an existing facility. Now there are various ways of doing it. So there are many ways of freeing up capacity from your existing plant, and then you can take on more projects.
Thank you. We would request the current participant to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good afternoon, sir. My first question is, could you quantify what was the growth in our CRAMS business for the 9-month period?
Arijit, do you have that number?
Yeah. I'm just giving it. You just need a moment. Okay. Yeah, CRAMS business grew by 14% on a 9-month basis.
Okay. And
hold on. Yeah, okay. Yeah. Okay, go on, please.
Yes. Sir, this was lower than the expectation, or this is as per your expectation for the CRAMS business growth?
It will be a little bit slower because there was a sub-deferment, right? Some deferment in terms of dispatches. So Q4, it will all catch up. Right? In terms of order book, in terms of production, it is all right. Only some orders could not be sent because of the shipping line problem.
Sure, sir.
Yeah. On a year-on-year basis, it will be a significant growth, actually.
Yeah.
Sure, sir. Thanks for the clarification. My second and final question is, so there was this one of our major products which was supposed to get banned in Europe, but because of COVID and other reasons, the ban had been deferred by almost a year now. So could you talk about, and we have shifted some of our customers to the new product. So could you talk about the contribution of that product and what are our plans in case that ban is enforced by FY21?
See, one product got withdrawn in Europe 1.5 years ago. And interestingly, that's the product where we are running so short of capacity, and we're literally we are booked till the end of Q2 of next year. So Europe sometimes constitutes 15% of the total market. So it's not the end of the world. In terms of any such eventuality, we've already got a new generation triazole fungicide under development, which we plan to bring online by 2023. So that's the risk mitigation plan. This product, even if there's any product issue in Europe, is not going to become zero. It's just going to decline a little bit, and we're going to make it up with the large volume sales of this other product.
Sure, sir. Thanks for the clarification. Thank you.
Thank you. The next question is from the line of Akash Manghani from Bank of India AXA Mutual Fund. Please go ahead.
Yeah, good afternoon to the management. Am I audible?
Yes, sir, you can go ahead.
Yeah, sure. Couple of questions, a couple data related and couple strategic in nature. The first data related one. So could you quantify the volume growth that you witnessed in 9-month FY21? There was a big pricing impact, I believe, right, for one of the products. I just want to understand what is the volume growth.
Yeah, volume growth. Arijit, you have that number?
Yeah.
We have it here.
We don't have it ready.
I have it here somewhere. One sec, hold on. Somewhere laptops. Okay. We don't have it on a. It's on a blended basis. It's a bit hard to tell you. It varies from product to product, right?
Total volume growth will be around 20%.
I'm sorry?
15 to 20% will be the roughly volume growth.
Okay. And what would be the split between domestic and exports this year and last year?
Yeah, domestic, we consider both domestic sale as well as the deemed.
Yeah. Call it about 50-50, Arijit, right?
Yeah. But the domestic also include deemed sales also, deemed export.
Yeah.
And what would be the growth rates for each one of them, domestic and exports, for 9 months versus 9 months?
Growth rate for domestic and export. 60. So domestic is around 60% year on year, and exports is around 40%.
So this is the sales split, right?
Yeah.
And the growth rate would be how much?
There's a growth rate, not the sales split. There's a growth value. There's a value terms.
Okay.
It seems
no.
Doesn't add up actually.
Overall, it's gone up by 11%. I think that the domestic growth was slightly higher than the export growth, because the proportion of exports this year has been a little less than domestic, because we concentrated a little bit more on domestic because our realization was better on the. So you might say that the blended growth is 11%, and the domestic growth is a little more. So we don't have the exact numbers. So
okay, no problem. On the strategic question, I heard on the last conference call you mentioned that with this new R&D facility, once it comes on, your capabilities would increase many-fold. You are able to 5x increase in capabilities. Also, earlier during the call, you mentioned that incremental inquiries are coming for higher margin products. So, if you were to take a 2 to 3 year view after your R&D facility comes on, and I believe you're hiring a couple of key employees as well over there, what's your sense? What sort of chemistries would you be able to look at? What opportunities are you targeting in terms of revenue size? Any ballpark guesstimates would do at this stage? What sort of ROI would you be happy with, once you start to meaningfully tap these opportunities?
Okay, there's a lot of questions in one. The bottom line is we want to increase our EBITDA margins from 20 to 25%. Okay. And we want to grow at the rate of 20% compounded. So we got to roll out molecules at that rate. We got to roll out higher margin products in order to do that. So in order to do that, we need to develop the capability which attracts the higher margin products. So what are we doing in the new R&D facility? We're going to be developing capabilities for fluorination. As you know, Navin Chlorine, SRF have a monopoly on this. We're going to develop the capability for this. Organometallic chemistry, chiral chemistry, high pressure chemistry, flow chemistry, hydrogenation, some biochemistry. These are just a short list of the kind of things that we will be developing in the new lab. I mean, it's just a flavor. The chemistry is a vast subject, and we'll be working on all sorts of things. Then in a chemical plant, the profitability is not only driven by chemistry; it's also the engineering. As I said, there are ways and means of improving the efficiencies. So there are process intensification methodologies. There are vapor phase reactions. So we'll be setting up facilities for all those kind of things, working on various new age technologies. So all these initiatives put together, combined with the bench strength, I mean, we will have that many more fume hoods and that many more people working on all these problems, which will enable us to roll out multiple projects. What happens now is if you're able to roll out 2 products in a year with that new R&D pipeline, with a new R&D facility, the new teams that we're building for technology transfer, we might be able to do 4 or 5 products a year or 6 products a year.
Right.
That's how the growth will be accelerated.
But it will take some time.
Sure.
Yeah.
And are you agnostic to the end market, or would this be agri-focused, or would this be across different end markets?
Well, as I said, we are technology focused. So if the same chemistry can be made in the application can be in a fine chemical, or it can be in a pharma intermediate, we are agnostic to that. In fact, there are many opportunities in that area as well. But we don't want to invest separately in a GMP plant because that's a different ballgame altogether at the moment.
But we could do it at the right time.
But at the right time, we can do it in the future.
Thank you.
Yeah, just one more addition. That growth rate, the domestic has grown by almost 20% and exports is by 6% on a year-on basis.
Thank you. We take the last question from Umang Shah from Asian Market Securities PMS. Please go ahead.
Hi, sir. Thank you for taking my question. Sir, so exports have grown from 90 crores in 2016 to more than 300 crores, almost 100 crores in this year.
Sorry to interrupt. Umang, we would request you to speak a little louder, please.
Sure. Is it audible now?
Yes.
Yeah, hi. So exports have grown from 90 crores in 2016 to almost more than 300 crores in this year. So could you roughly break down how much of this export revenues have come from new geography, number 2, gaining market share, and number 3, increasing volumes in the same geography?
To be honest, I have no idea. I don't know the answer to that question. How much has come from new geographies? Well, I mean, the geographies are frankly the same. They're Europe, they're North America, they're Latin America, Australia, and domestic. And of course, recently we've opened up Japan. I don't know how much that would be, perhaps 20 to 30 crores. How much has come from, what's the other part of your question?
So how much would have been coming from new products?
This data we have to don't have a ready-made.
Sorry, can we just do this offline afterwards?
Yeah.
You can just send us this query.
And also, just to add on, sir, the numbers are not correct. The export YTD basis is not 300 crores under date. It's lower. So there seems to be some problem in the data as well. So probably we can take it offline.
Sure. Yeah, sure. Thank you.
Thank you. Due to time constraints, that was the last question. I now hand the conference over to the management for closing comments.
Thank you. I hope we have been able to answer all your questions. If you have any further questions or would like to know more about the company, we would happy to be of assistance. Stay safe and stay healthy. Thank you once again for taking the time to join us on this call.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.